JB here. Hope everyone's doing outstanding. December 24th, 2024. I want to wish everybody a Merry Christmas, Happy Holidays, Happy Hanukkah, whatever you celebrate. Um, yeah, so hopefully, and then of course a safe and healthy New Year. But that's until next week. But welcome to the Santa Claus rally time frame. 5 days trading sessions before the year end, and the 2 day sessions, two sessions after all the hype. We'll see if it's what we'll see what happens this year. I think going back to 1950, the S&P has closed up 80% of the time over that time frame. I was just looking over the last 5 years over the weekend for small caps, and 4 of the past 5 years have been to the downside, with one of them being over 3% to the downside, or nearly 3% over just over those 7 day time frame. So hopefully that's not the case. We bucked the trend. I was talking about it yesterday. So the S&P broke under the 50-day moving average yesterday morning. 10 o'clock found the bottom, and then it was just a slow, meticulous bounce to the upside. Nothing, no crazy swings. It seemed almost like last Wednesday was a foregone, but was a long way memory, right? So I guess that's a good thing, and we'll see how today's trading action is. Typically, it's one of the top three or four, sometimes the top in regards to trading volume. I wouldn't say the top, the lowest trading volume of the year session. So that'll either be today. We'll see how it plays out. Yesterday's volume was half of Fridays, half of Thursdays, half of Wednesdays. So probably going to be a deja vu scenario. But just watching that 50-day moving average is at 589.74. So I want to see that hold. I take some serious selling to get there. On the flip side, that 600 handles back in focus. That big support we hit last Wednesday on the Fed day. If we get up to there, I don't know if it'll happen here today, but in the coming days, that'll be a big spot to watch. And then I keep saying, for now, the only thing I think could really curb this, any crazy surprise catalysts, geopolitical situations, what have you, and then the yields, and the 10-year just keeps creeping higher and higher. I put on the watch list this morning. At some point, it's going to cause some kind of repricing. And typically, as yields go up, and we saw this back as the Fed started normalizing policy, raising rates, the names that would that have debt, that need equity markets or capital to continue to scale and things like that, those are the names, the momentum names, the ones that aren't profitable, those are the ones that typically take a hit first, right? So those will probably be the ones that you'll see start to get some pressure before the big downturn. But hopefully that doesn't happen. Yields at some point, you would think, start to flatten out and then start to head back down. All right, so that's overall markets. Unfortunately, the small caps too didn't perform with the markets yesterday, closed down a 0.25%. But again, we have the bullish 7 day trading sessions ahead, including today. Hopefully that's the start of something. All right, so now individual names. First, I'll talk about AMD, and they always, I talk about the forgotten stepchild, or what do you call it, the redhead stepchild. There's all these names that you get, but just pretty much in a nutshell, what I mean is, it seems like it's forgotten in regards to the semi space, and sometimes rightfully so, and then other times not. I mean, they had great earnings a couple months ago, last quarter, and the stock still sold off after gapping higher. It did it in the summer as well. At some point, it's going to reverse course, and maybe it starts to outperform some of its peers. So it hit 52-week lows last week, and I think it was December 8th of 2023. It was down in the 116s. So pretty much a year ago, we were at that juncture, at least last week's levels, and then it started to gap higher yesterday. So went and got some calls and continued rally. I locked some of the calls in to cover cost. Close up 4.5%. Here it is, gapping up near 127.40 this morning. I'll probably look to close some more calls out at the open, and then I might look to get some more positions, just because you start looking at the chart. There's a gap fill around 135 from earlier this month. If that fills, maybe it gets over into the 140s and catches some fire, some momentum. So everybody's always looking for other names. You see the runs that NVIDIA and some of the other names have been on. Not saying AMD is up a lot over the time frame as well, but not nearly as much as some of the other names. So maybe it's time to start play catch up. So that's AMD. Some other names, and first of all, Lemonade down 4% yesterday. Really no news, no catalyst. But it did close up over 10, well, nearly 10% on Friday. So just gave back some of the gains. Still setting up. I still has a bull flag setting up on the chart. I think it heads to $60 in the coming weeks. I'll wait for it to probably to break 50 to confirm the uptrend, and I'll look to add some more strikes there. Solar Edge over its downtrend. So closed barely in the green yesterday. It was over 15 for a while. Then After the morning, came back into the 14s, rallied at the end of the day, closed nearly flat. Just a matter of time before I think that catches some Momo. Uh, Maybe even the first couple days of 2025 might be the time some of these names start to rally as well. Um, I was talking about this yesterday on the rant. I mean, these insurers, obviously, what's happened is going to have some kind of impact, and there'll probably be pressure from constituents to their to their lawmakers to get some kind of reform, I guess, in the healthcare sector. I mean, it's an area that's always been a hot topic, right? And it just probably the tragic events just bring that again to the forefront. But I think some of the moves here have been it's overdone. And I'm not saying that some of the names may not continue to head lower, but I think there's an opportunity to play at least a couple days move to the upside. I'm looking at Cigna, and I was talking about yesterday afternoon, the 290s or even the 295s look interesting on a risk reward basis. You have to pretend when we're at the open that it's pretty much Wednesday afternoon, right? I mean, that's how you have to picture today, uh, because markets half day today and then close tomorrow. So still, I might look at those, or I might look for some strikes into next week, just as a short-term bounce. I mean, the other way, obviously, you could play Humana, but I'd rather just stick with, and the premium's a little more pricier on Humana. So don't be surprised if I add some spec calls in Cigna. And then some other names, TripAdvisor. I was looking at the January 15s. I tried to get some fills at 30 cents. Of course, someone did, but I didn't. Might look to enter those today if it holds over 14 at the open. If not, I might look at February 16s. That acquisition last week, I think that kind of puts to ease some possible concerns with the company. And then you look at its fundamentals. They have three segments, and one of them, I think it's called the Fork. I forget what it is, but it's pretty much what Open Table was for the U.S. And if you don't know, back in the day, I used to be very bullish Open Table. Got acquired by Booking, well, Priceline.com at the time, and I had calls, and I think they were 5 cents. I think they went up to $45 at the buyout. But not saying that Trips that use the same analogy here, but I thought it was a great business model. And they have two other segments, right? One's the Viator, and then obviously the most trafficked travel website on the planet is TripAdvisor. So they have a lot of different levers, and the other two segments are growing despite the TripAdvisor core business has been declining a little bit, but still like this one for upside into 2025. Don't be surprised they had some strikes there. Joby closed flat, one of its tightest trading sessions in recent memory as well. Low of 750, high of 780. Is it 782? 788. So pretty tight trading range in regards to as far as Joby. I mean, for some other stocks, it's a wide trading range. But at some point, I look for some strikes in it. The silver lining here is those Februarys are getting less expensive, so I might look to get some February 10s. And then last but not least is Deckers. And, it had that nice rally on Friday, gave back some of the gains yesterday, but I think it's a name that I wouldn't say it's priced for perfection, but I think some folks are going to start looking at some names that might have higher cost issues, right? So when you have a company that gets lots of materials or even produces a lot of its products abroad and especially, in China or some of these other Southeast Asia countries, I have to think, even if it's a small chunk, that if there is potential for tariffs, the market's going to start pricing that in a little bit. So I just think if I look at a name that will, number one, be a possible protection as a hedge if the market does have weakness, and then number two, might fall even if the market rallies into 2025. I think Deck is one of those names. So don't be surprised if I add some strikes there, at least for a move, maybe to 190, 180. 50-day moving average down there at 180, 197. It has a gap from earnings back in middle of November. So that would be a spot I'm looking at. And that's it, folks. Let's have a great day. Again, happy holidays, Merry Christmas Eve, Happy Hanukkah, Festivus, Kwanzaa, whatever you celebrate. Just hope you have enjoyed the time. And that's it, folks. I'll be back. Rock and roll.